Welcome to AI Forex. I'm Clara Garcia, and today you're getting a full beginner's guide to Forex trading. Whether you're curious about currency markets or serious about becoming a trader, this is the best place to start. Let's take our time and break everything down, one lesson at a time. First, what is Forex? Forex, short for foreign exchange, is the global marketplace for exchanging one currency for another. It operates 24 hours a day, 5 days a week, and it's the largest financial market in the world, with over $7 trillion traded daily. Unlike a stock exchange, the Forex market is decentralized. That means trades happen over the counter through networks of banks, institutions, and individual traders. The goal is to profit from changes in currency values. For example, if you think the euro will strengthen against the dollar, you might buy the euro-US dollar currency pair. Now, why trade Forex? There are several reasons why people are drawn to Forex. First, the market is open virtually around the clock, giving traders flexibility no matter their time zone. Second, Forex requires relatively low capital to get started thanks to leverage. But while leverage can amplify gains, it can also increase your losses, so it must be used responsibly. Third, Forex offers high liquidity, meaning you can enter and exit trades with ease. And finally, Forex has the potential for profits in both rising and falling markets, since you can go long or short depending on your outlook. Next, how does Forex trading work? Forex trading involves buying one currency while simultaneously selling another. Each pair has a base and a quote currency. In euro-US dollar, the euro is the base and the dollar is the quote. If euro-US dollar is at 1.10, 1 euro equals 1.10 US dollars. If you think the euro will rise, you buy the pair. If you think it will fall, you sell it. The smallest price movement in Forex is a pip, typically 0.0001. If euro-US dollar moves from 1.1 to 1050, that's a 50 pip move. Your profit or loss depends on the number of pips and the size of your trade. Next, what are the major pairs? Major currency pairs are the most traded in the world and involve the US dollar. Examples include Euro-US dollar, British pound US dollar Japanese yen, and US dollar Swiss franc. These pairs tend to have lower spreads and better liquidity, making them ideal for beginners. Cross pairs, which don't involve the US dollar, and exotic pairs, which involve currencies from smaller economies, are also available, but they come with wider spreads and more volatility. Next, reading a Forex chart. Forex charts are essential tools for technical analysis. Most traders use candlestick charts, where each candle represents a specific time period, such as 1 hour, 4 hours, or 1 day. A green candle shows the price closed higher than it opened. A red candle shows it closed lower. Charts help you identify trends, spot support and resistance levels, and see patterns like double tops, head and shoulders, or flags. You can also apply technical indicators like moving averages, RSI, and MACD to aid your decision-making. Next, different trading styles. There's no one-size-fits-all strategy. Scalpers make many trades in a single day, aiming for a few pips each time. Day traders open and close trades within the same day. Swing traders hold positions for days or weeks to catch bigger moves. Position traders take a long-term approach and may hold trades for months. Choose a style that fits your schedule, personality, and risk tolerance. It's better to master one style than to dabble in all of them. Now let's talk about risk management. This is the foundation of sustainable trading. Risk management means only risking a small percentage of your account on each trade, usually 1 to 2%. Use stop-loss orders to limit potential losses. Define your risk-reward ratio before you enter a trade. For example, if you risk 50 pips to potentially gain 150 pips, your risk-reward ratio is 1/3. Never add to a losing trade, and always protect your capital. Surviving is more important than winning every trade. Next, trading psychology. The hardest part of trading isn't the strategy, it's mastering your emotions. Greed, fear, revenge trading, and FOMO are all psychological traps. Successful traders develop discipline, patience, and emotional control. Keep a journal of your trades, including why you entered and how you felt. Over time, this builds awareness and helps eliminate impulsive decisions. Your mindset will determine your success more than any indicator ever will. You should practice with a demo account. Before risking real money, use a demo account to practice. Most brokers offer demo accounts that simulate live market conditions. Test your strategy, get used to the platform, and make mistakes without consequences. But don't treat it like a video game. Take it seriously. Once you're consistently profitable in demo, start small in a real account and scale slowly. Finally, is Forex right for you? Forex trading isn't for everyone. It requires time, effort, and resilience. There will be losses. There will be frustration. But if you treat it like a business and commit to continuous learning, the rewards can be significant. Start with education. Build a strategy. Manage your risk. Master your mindset. If you do those things, you won't just trade the market, you'll outsmart it. To get started, you'll need to open a trading account with a broker of your choice. This is your gateway to the Forex market. Brokers offer different types of accounts, so take time to explore what's best for your goals. Many brokers provide access to CFDs, contracts for difference. With CFDs, you're not actually buying or selling a currency. Instead, you're entering a contract with your broker to profit or lose based on the price difference from your entry to your exit. This is similar to spot trading, but without taking physical ownership of the asset. CFD trading allows for leverage, meaning you can control a larger position with a smaller amount of capital. But remember, leverage magnifies both gains and losses, so choose wisely. Make sure your broker is regulated, offers a demo account, and has competitive spreads and solid customer support. Thanks for watching. Subscribe to AI Forex for more real talk, smart strategies, and weekly updates. And remember, this content is for educational purposes only and does not constitute financial advice.